Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, July 1st, 5:03 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup daily market insight video. Market state, we're in an uptrend since May 6th. Check the trend gauge over here. All four green arrows doesn't mean that the coast is completely clear. Got the sub arrow on leaders, had some weakness last week. Four of them punted off of the list, but for the most part, holding up pretty well. And then we take a look at the five major indexes. Net, meaning the way that we weight them and score them. We still got the three green arrows on the indexes, but mid caps have been trending below the short-term 21-day moving average and medium-term 50-day moving average. Small cap poked their head back above on Friday, but back below today. Rising interest rates, the culprit there. Small caps, particularly small growth, just cannot succeed in an environment like that. And so we've got the two yellow sub arrows for those time frames. All five of the major indexes trending above their long-term 200-day moving average. Market never gets into serious trouble if you're above the 200-day. Doing some arguing on Twitter with some pie chart buy and hold forever, particularly one guy who just says market timing, tactical asset allocation doesn't work. You miss all the rallies. He obviously doesn't watch these videos. We put our performance out there every night. The one thing I know is that we have our rules set up to make money in a bull market, protect money during a bad bear market. Buy and holders will make money in a bull market, but they'll lose it in a bear market. No sell discipline. How much will you lose? Well, that depends on the market. You don't have to be at the mercy of the market if you're with us at Revere. So what happened today? New quarter, there's always a risk of some rebalancing type shenanigans, out with the old and with the new. As you click over to a new quarter, we saw it back at the beginning of the year as growth sold off hard. And right out of the gate today, growth sold off, three waves down most of the morning. But funny thing happened on the way to the graveyard. Buyers showed up late morning and throughout the afternoon. So morning sellers of growth met afternoon buyers, although mid and small cap couldn't recover that because of the spike in interest rates. Early on, and I'll show you these two charts, early on value far outperforming growth, but by the end of the day, growth took the baton back. Here are the final numbers. Nice effort by our 21 over 21 leaders list, up 0.63%, 13 up, 2 neutral, 6 down. The big eight, this is where the money flowed into after some initial weakness, up 1.77%. RG8, not so good. When small and mid are down, you're going to see this, and this is why our portfolios have been focused on the big tech names. RG8 down 0.34%. S&P 500 opened up 0.23, dropped early, rallied late, ended up near the highs of the day, up 0.27%, equal weight. Here's that problem with breadth. RSP down 0.81%. NASDAQ 100 leading the way on the back of big tech, up 0.59%. Equal weight, however, down 0.18 as semiconductors net were flat on the day. Dow up 0.13. Here's the weakness. Mid caps down 1%. Russell 2000 small caps down 0.86. Global diversified 60/40 stock and bond down 0.07, primarily bonds dragging this down because of the spike in rates. In-house, our flagship portfolio GROTECTION up 0.25%. We did get stopped on a few things and trimmed a few things, but the leaders that we have did their job. We'll go through the portfolio as we go through the video. Let's start with the S&P 500 here. And now for 10 days, let's go to the 30-minute chart here. We've been drawing these lines consistently. 54.46 on the bottom. We're calling it 54.91 on the top, two false breakouts. And if the market was having a conversation with itself, you'd see with a breakout back here, yeah, we're up, we're good, up, we're going sideways. But when you don't break the low, you're still in that range, everything good. So then we break out another range. We're good for a day and a half. Try to poke our head above, not so fast. Just go sideways for a few days. Try to poke our head above again. Sell off hard, but not a failure of the breakout. Well, a failure of the breakout, but not a breakdown of the range. Let's say that. You can see the number of times here we're coming into this 54.46 level. Resistance on the left side, or yeah, on the left side of the chart, finally broken. Support on the right side of the chart. So 10 days now bouncing around inside this 54.47 to 54.91 range, we're calling it, with two failed breaks above the top of the range. Back to the daily chart, we also closed less than a tenth of a percent below the 8-day exponential moving average on Friday. We undercut that, but got back above it by the close. There's your S&P 500. NASDAQ 100 also undercut early the 8-day moving average, but closed near the top of the range by the end of the day, showing strength. Dow Jones Industrial Average, big cap defensive index, but it's hanging above the 21 and 50-day moving averages. Now on to the troublemakers, the mid cap 400 poked its head above the 21 and the 50 on Friday, but couldn't close there. Back down near this 2,900 level. You can see we're forming a triangle with some descending tops there. We need to hold here. Bulls, of course, want to pop above that. Bears want to take it below 2,900. Russell 2000 small caps close above the 50 and the 21 on Friday, right back below it today. You've also got really, it's more of a triangle here, looking for a break one way or the other. Those are the 5 major indexes. Let's quick go to the equal weighted indexes. RSP here, that's ugly. Breaking below last week's lows. That is a testament to how weak the breadth is. And absolutely, these big caps are holding it up. You can either complain about it or you can participate in it. You know what we're doing if you watch these videos. And equal weight NASDAQ 100 tried to break out on Friday. That failed. Undercut it, reclaimed the 21-day moving average by the end of the day. Relative strength continues to be so good on that. Let's go to the VIX. Range continues to be pretty tight. VIX down today, 1222, down 1.8%, reflecting the reduced volatility. US dollar. We're having a problem with this chart. We're gonna have to go to UUP. There's a bad print on it and it's completely messing up the chart. UUP near the highs of the day. Let's see what the intraday action was. We gapped down on the dollar. Dollar got strong as the market came off. Dollar came off as the market got strong during the day. So inverse correlation today, at least to the indexes. How did that carry over to the precious metals? Gold, really tight range over the last 3 days, up 0.25% today. GDX started strong, faded, down 0.12%. And silver, up 1% on the day, again into the declining 21-day moving average. Watch this declining tops trend line there as well. And then across the bottom, that 26 level acting as support. Bitcoin, big move up today, up 5.5% after just a terrible week last week, coming into these overhead 21 and 50-day moving averages. Now on to bonds. Bond prices down hard for 2 days now. Bit of a surprise. That's why you can never tell what the reaction is going to be. If you had the PCE inflation data, you would think that yields were going to drop, but they didn't. Prices dropped, which means yields spiked. Here's TLT, another ugly day, down over 2%. This is the long bond, and the long bond breaking out to the upside, and we got a bad print there as well. You're killing me, Market Smith. That is just that range is all messed up. I don't know what's going on with these charts. And I'm sure the TNX is messed up too. Yeah, that's it. Well, it's not fit correctly, but you can see the yield up 3.13% today with another gap up on the 10-year. All right, that's our inter-asset correlation. Let's go to the tail of the tape. The market this week, 1 p.m. early close, then closed Thursday for the July 4th holiday. Friday morning, we've got the government jobs report. Could be some fireworks off of there. Day count, 10-day consolidation. Keep those ranges. That's what's dictating things. Back above the 8-day moving average for the first day, 21 days above the 21-day moving average. Look at these sectors here. Only two sectors stronger than the average close, that being two of the tech sectors, XLK, technology, XLY, consumer discretionary. And then look at all these sectors that were lower: banks, home builders, transports, retail, basic materials, industrials, staples, utilities, healthcare, real estate. Looks like it looks like the market got murdered today if you just compare that. But again, the strength of those NASDAQ 100 leaders carried the S&P and the NASDAQ to green closes. So right out of the gate, Micron, we sold it. That was our after-hour starter position after earnings. Took a small loss on that. We trimmed Uber on weakness. I swear Uber. We'll look at the chart later, but Uber was held up on Friday, major relative strength. It seemed like it was held up just so that somebody could sell it off today. Weakness all morning, did battle back a bit during the day, but when we do an add-on and it fails immediately, we take that add-on off. That's what we did. Same situation with Meta, as it was weak Friday into the close and weak early. Sold half of that, our add-on that went red. NVIDIA, we booked some gains on this between 20 and like 30%. From the most recent breakout, as it broke below the 21-day moving average early, rallied late to reclaim it. We also put a hedge on, breaking the 21 for our taxable accounts, took some of that off by the end of the day on the strength. So for now, NVIDIA held where it needed to. And we'll take a look at that chart also. And we bought LABU, that's biotech, as they were strong early. Held up somewhat, but well, no, they didn't. It faded. IBB was red by the end of the day. So that reduced our overall exposure. We want to stay at least above a 1 as long as we're above the 21-day moving average on, when I say a 1, I mean a 1.00 adjusted beta. That's in line with a full position in the S&P 500. When the market's healthy, you better be participating. That's the way we look at it. And these rules just came from looking back in the past. Years ago, we underperformed. Why did we underperform? Well, we weren't in the market enough. So we set minimum thresholds depending on where we are relative to the moving averages. That dictates the strength of the market. And we know we need to be in at least 1.0 if we're above the 21-day moving average, even if we're getting stopped on some of our positions. Eventually, if we get stopped on everything, that will correspond with deterioration in the market, and we'll get back below that 1.0, especially if we break the 21-day moving average. But bottom line on the day, early growth sellers meet afternoon buyers. Good for big tech, mid caps and small caps weak. Let's take a look at some charts. We're going to go to the 21 over 21 leaders list, two new ones this week, Datadog and APP, as big strength in software last week carried over today. All right, let's start off with Apple here. So these are sorted. We're going to go through all. I'm in the wrong list. 7-1. Here we go. Sorted by strongest to weakest. We'll start off with Abercrombie and Fitch. If it has a red flag here, or sorry, green flag here, it means we own it. We own these top 4 on the day. Good for the portfolio. Abercrombie bouncing at the 8, making, oh, Jesus, that's Apple. Abercrombie and Fitch reclaiming the 8, bouncing off the 21 last week. Above average volume. 2 nice candles here for Abercrombie. Apple, we do own this. Bounced off the 8-day moving average. Kava making a higher high, up 2.7%. And CrowdStrike undercutting, but reclaiming the 8-day moving average. Again, it's a case of early week going to late strength. Told you there's 2 charts that would be very obvious. Let's go first to SPYG. This is the growth half of the S&P 500. On a 5-minute chart today, you can see why while we opened up 0.25%, growth opened just barely higher and then sold off immediately, but the strength came in and then based in the afternoon. Compare that to SPYV, the value half with a gap up, ran to higher highs and then abruptly sold off. That abrupt sell-off corresponded with growth putting in a bottom, and you can see value sold off the rest of the day while growth was strong. So market made an attempt to dump the growth leaders. Buyers showed up and it flipped, and value went from leading early to lagging by the end of the day. All right, back to the daily charts. We'll go through the rest of this list. Palantir up on the day, Amazon up 2%, APP, one of the new ones. A lot of five software names in here, different same sector, but different industry groups within software. AppLovin looking good. NRGU, volatile on the day, closed mid-range, but a higher high. Bros continues to ride the 8 higher. Lilly, just a champ, riding the 8 higher. Here's NVIDIA. Let's look at the NVIDIA action. Um, Opened up just basically flat, hard sell-off early. After that first 30 minutes, buyers came in and then based in the afternoon. Net, that just means an undercut and reclaim of the 21-day moving average. So when we saw the early weakness, here's the problem. There is very little support between a break of this low here, the low from last week, and the 50-day moving average. All there is this 2 weeks of buying here. And if you look at it on a 30-minute chart, well, let's go to a 60-minute chart. You can see that this break higher, that's not a good line. This is a better line. Okay, this is the level I'm concerned about. This, we had a little bit of a gap up here. We've been testing it periodically. This was the latest test. Last week we came near that. If that level breaks all the way down to the 50-day moving average, is a 17% dump. And we don't want that. That's why we were so anxious about hedging here and then took some of the hedge off by the end of the day. But we do not want to break the lows from last week because it corresponds with this little shelf here that we broke out of to go higher and make the all-time highs. And there's very little support between the 50-day moving average, which is above the pivot, but still, like I said, 17% low below where we closed today. Let me get the updated number on that. It's actually 17.9%. We do not want to see a plunge to there. Risk is always to the 50-day moving average on big leaders. This is just historically, you see this on charts over and over again, and we do not want to give back those profits. We don't want to sell the stock. It's a leader, but we don't want to give back the profits either. So we're hedging with inverse ETFs for taxable accounts. We trim some for non-taxable accounts. So that's NVIDIA. Next up, Datadog. This was would have been a great in the whole buy on a break back above the 50 and 21 last week above the 120 area. We're looking for some consolidation now. Coherent continues to hang up great. Meta, we've been shaken out below the 21, reclaimed it by the end of the day. So it started looking like a failed breakout above this pivot and then a break of the 500 level, but buyers showed up. Spotify undercut, closed back on the 21-day moving average by the end of the day. TMDX, higher high and then reversing at the 150 level. SRPT, higher high and then reversing. SARK, breaking below the 21 and the 50-day moving average. This means ARK-K is doing well, and you can see it getting back above the 21 and the 50. And why is it doing well? Because its biggest holding, Tesla, cleared the 200-day moving average today. Great volume patterns on Tesla. We're looking at establishing a position on this on a pullback. Tesla up 6% on the day. SARK has no chance if ARK-K is up. And if Tesla is up, ARK-K is going to be up. Uber, very weak early. Let's go to a 5-minute chart on this. Extreme strength on Friday, extreme weakness early with volume. Volume selling there, and then it just abruptly put in a bottom, worked its way higher, regaining the 21-day moving average and the 8-day by the end of the day. Pinterest, however, down 2.25%, first close below the 21-day moving average. And ELF, kind of volatile lately. Some big up days, a tight day on Friday, gave it back, tried to make a higher high and gave it back today, still holding the 21 and that 200 level, which is solid support. So that's a 21 over 21 for this week, and that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. I'm on Twitter at @dvandenbord. The phone is 855-REAL-WEALTH. That's 855-732-5932. Call my partner, Dan, or email them, dan@revereasset.com. If you're interested in becoming a client, our flagship portfolio is named GROTECTION because it dual purpose, participate during market uptrends. The rules just say we have to, whether we want to or not. We're following the trend of the market, participating during uptrends. And again, whether we want to or not, we're selling if things get weak. Got to stay out of the way of sell-offs in the market that have the possibility of turning into a bear market. And that's especially if they break this black line, the 200-day moving average. All bear markets occur below this line. May not become a bear market. Typically, it's 12% down from a high until you pierce the 200-day moving average. Right now, we are 12.4% above that level. Just because you get below that doesn't mean it's going to be a bear, but it can't be a bear without that happening. Very similar to O'Neill's follow-through day. Not every follow-through day leads to a rally, but you can't have a rally without a follow-through day. And it's about rules, following them, sticking to them. That's what we do here at Revere. If you're interested in becoming a client, the time to bring your money to Revere is not after you lose 20% with some pie chart guy that doesn't have a downside protection. The time to bring it is when they're benefiting from the bull market the same way we are. The difference is they're going to give your money back to the market in a bear market, and we're going to protect it with the rules that we talk about every night on these videos. And with that, I'm going to wrap it up for Monday, July 1st. Connor will have Tuesday's video. No, Ted for Tuesday. Ted will have Tuesday's video. Connor will have Wednesdays. No video on Thursday, but we'll have a podcast, and then I'll be back on Friday. Thanks for listening, and have a great day.